Welcome back. Let's talk with an experienced money manager about two of the most high-profile stocks in the Canadian stock market. Celestica, considered one of the TSX's bellwether tech companies, and Agnico Eagle Mines, considered by many portfolio managers to be a go-to name in the gold space. Celestica has boosted its revenue forecast, while Agnico Eagle quarterly profit nearly doubled, and the company also topped estimates. My next guest is Denis Taillefer, portfolio manager at Caldwell Investment Management. Denis, thanks a lot for joining us. Let's talk about Celestica. It's an interesting story. There was a point where the stock, the market was in love with this stock, and it hit a very high share price, and we've really seen it come down over the past couple of months. What's your take on Celestica and its valuation right now?
Thanks for having me, Paul. It's funny you refer to it as a bellwether for technology, which really wasn't the case for Celestica, 5-10 years ago. But today, yes, that is a good description. We've seen it in the AI trade. 2023, 2024 was a very good place to be in that AI trade. But there were concerns that were building in that trade from a capacity standpoint. The concern was there was too much money being spent, too much capacity was going to come online, and there was concerns about overshooting, right? So fundamentally, we haven't seen that, but the sentiment was starting to crack a bit. And then when the DeepSeek story came out, that's when the sentiment really turned negative on that overall AI trade. So Celestica got caught up in that. They've all been selling off quite hard. But again, fundamentally, although the sentiment turned very negative, fundamentally, the story still seems very solid, and we really haven't seen kind of a break in that CapEx spend on a go-forward basis. And as long as that can be sustained, then we think, this story probably still has a lot of room to grow.
Let's talk about that CapEx spend that you referenced. What you're referring to, I'm quite sure, is the capital spending of the so-called hyperscalers, the tech giants who are building out compute capacity in large data centers. They've become a major customer of Celestica's, and that story is the story that drove Celestica stock to those peaks. Alphabet has reported results and did so after the close of trading. Do we hear anything from Alphabet, the parent, of course, of Google, on its CapEx intentions?
Yeah, we certainly have. It was actually, I'd say fairly good news. They're on track to be spending $75 billion this year. They're not pulling back on that. And if anything, one of the comments they made was that their demand is outstripping supply. So their capacity is really tight. So they need to spend that CapEx to build more capacity. That's kind of been the story for the other hyperscalers as well, although we have heard a few stories on Microsoft kind of pulling back on some of their projects. But we haven't seen anything from an overall CapEx spend come down yet. So is that just a shifting of CapEx from one project to another? We're not quite sure yet. Next week, the other hyperscalers are going to be having their earnings call. So we're really going to pay close attention to what Amazon and Microsoft and the Metas of the world have to say on that CapEx outlook. But from a Google standpoint, we think the story is still kind of tracking in a positive way.
We don't hear a lot about DeepSeek anymore. Granted, it's been a couple of months or so since the great DeepSeek scare. DeepSeek, of course, a Chinese-made artificial intelligence chatbot that was, we understand, the story was at the time, developed for pocket change compared to what these other hyperscalers are spending. What do you make of the DeepSeek story?
Well, we're not, completely brushing it off, but I think the whole market was a little bit skeptical on the costs that they were kind of referring to be able to develop their AI models. We do think there's probably some truth to it. They were able to do it at a much lower cost, but maybe not what they were indicating. But you need to place close attention to the developments. Things are changing very quickly in that AI space. You could have developments from a technology standpoint that could reduce the overall cost or CapEx required to basically move forward. So I think that's what again, the market's sold off really hard. That's what the market's nervous about. So you need to be able to, to keep that in mind and kind of track that. Celestica, obviously, they've got a lot of exposure to the major hyperscalers. I think the top 5 or top 10 customers are like 80% of their revenues. Their top 5 is over 50. So So obviously, any significant pullback in that capex spend would have an impact on the Celestica business. Although they're also in certain areas, and that we think the spend, which is they're more on the switches and so forth, which might be a little more resilient, but it's still an overall risk if we see some significant investments in driving down the cost to delivering those AI models.
Okay, let's move from Celestica to a stock that many consider to be a flagship in the sector that's really driven the TSX higher over the past year or so, and is a big reason why the Canadian stock market, as measured by the TSX Composite, is outperforming the S&P 500 south of the border in a big way this year. The gold sector is the sector. Agnico Eagle Mines is the company. What did you make of that company's most recent results?
Again, it's a strong quarter, kind of what you come to expect from Agnico Eagle Mines. They are the premier, gold producer in Canada. There's a lot of things to like about this company. And one of them is just they tend to be very consistent from a production standpoint and from an operational standpoint. So another really good quarter. Their production volumes were up, I believe, 4 or 5%. Their cash costs were down 5%, I believe. So it was a nice beat on the bottom line. And overall, their outlook is still fairly solid. We like the backdrop for gold, and we think if an investor wants to hold one gold name, this is usually the name that people go to. They've got really strong assets in very safe jurisdictions, and really strong operating track record. So it's kind of the go-to, and they keep delivering. And the stock's off a bit today. I think the gold is off today. It's had a really good run, but right now we see really nothing wrong with that story.
We will speak to the CEO, Ammar Al-Joundi of Agnico Eagle Mines later this afternoon. If you were able to ask a question, what would you ask the CEO?
I'd probably ask on as you go out a few years, kind of their growth outlook. They've got a lot of flexibility. They've got a pristine balance sheet, and they've got some projects, some organic growth projects, but kind of try and get a better picture of how they see their growth outlook kind of developing in that 3, 4, 5 years out from here.
Denis, thank you very much for this conversation. Denis Taillefer, portfolio manager at Caldwell Investment Management. He likes Celestica and Agnico Eagle Mines.